However, on the other side of the coin, that it actually tells us that for oil exporters, they are in deep trouble because of the oil price environment. I'm not going to go too far into it because I'm not an oil expert, but on the left-hand side of this chart, you can see that a lot of industries are being impacted by such external environment. Here, I would like to say that even though a lot of people believe chemical industry is benefiting a lot from the low oil price environment, we are not seeing that in Asia yet. Particularly, we are seeing that chemical industry, participants of the chemical industry are essentially being hurt for the time being. Why is that the case? I would like to explain it in this way. So when you are a chemical product manufacturer, you buy your input, and like it was when the oil price was actually higher, and when your customer make the order, oil price was at around $80 per barrel, and then when you deliver your goods after the manufacturing process, you deliver it, and the crude prices was already down to $50 per barrel. Well, your customers, when they receive the goods, they are not going to, they're not willing to pay you. They're going to ask you for discounts after you have delivered goods, and if you say no, well, in Asia we saw that some companies just refuse to pay. So that is actually leading to some worries regarding payment experience for the chemical industry in that sense, and that's why you see the aero chemical sector in Asia is actually declining from the very green side of things to the orange or red zone of the arrow. That would be everything that we covered for the global economic outlook, and here I'm going to follow up with some economic environment in Asia. Asia is still growing quite rapidly. Particularly the emerging Asia, we still believe that it will grow at around 6.3, 6.4% for 2015. Well, emerging Asia, Asia and emerging Asia, the difference is what? Developed Asia. So we can see that in the Asia Pacific region, there are countries that are growing less rapidly, including Australia, Japan, Hong Kong, Taiwan. Well, these particular economies are a more developed stage, and why would I say so? It is explained here. You can see on this screen that for the highlighted economies, Australia, Hong Kong, Korea, Japan, Singapore, Taiwan, it is easier for companies to do business in those regions. So like that kind of sort of defined how developed an economy is. And also, you can see that in these developed economies, they are what logistics performance index, which is developed by the World Bank, is actually much better. So again, that is a good thing about being, like in the developed economy. And then also, the control of corruption index, also developed by the World Bank, shares that in these developed countries, corruption is less of an issue. So again, prices are more transparent. You know what you're paying for. That's why like we call them developed countries. On the other hand, though, these developed countries are going to have lower or more modest growth, as we can see from the previous slide, and I'm not going to go back into it. From Coface, since we are looking at payment experience, we do something called the payment survey on an annual basis in different economies. Why do we have to do it instead of just dragging data from the Statistics Bureau and whatnot? Well, it's because your data is not particularly transparent in the Asia Pacific region. So we have to do something by ourselves in order to get a sense of what's really happening on the ground. To group Asia into one particular region, which I don't particularly like, but we want to do it simply because like people look at it that way. Well, 2014 represents a year of increasing overdue experience. So overdue occurred to around 7% of the firms that we surveyed and we surveyed around 2,700 firms. So yeah, the overdue experience was actually quite common in a sense. And when we're talking about average overdue days over 90 days, why do we look at it? Because the longer your customers owe you the money, the less likely they are going to pay you back. Is our experience. So we're just speaking from experience, and we are saying that in 2014 we saw an increase in terms of longer overdue payments. So again, it's a bad sign. However, when we talk about ultra long overdue, so we define ultra long overdue as 180 days overdue. These ultra long overdues are unlikely to be repaid at all. It is our experience that around 80% of these debts would not be repaid at all. So yeah, it is a big trouble. And if such ultra long overdue weighs more than 2% of your turnover, it simply means that like these firms could be in big trouble. So we see that from this particular standpoint, there was an improvement in 2014 comparing to the previous years. Well, why is that the case? We in the report that we published in April, we suggest that firms were getting more prudent in terms of their lending practices. So that could be one of the cases that they don't extend heavy credit terms to firms that are not paying them on time, etc. So but we can see that in Asia Pacific region, there's still a big chunk of firms that are not managing their credit properly. So 37% of the firms shared with us that they do not employ any credit management tool at all, and we believe that it is essential for them to see some improvement in this area. But like I said earlier, I don't like to talk about the aggregate experience too much. I like to talk about individual countries because the Asia Pacific region is simply too diverse. So here I start with Australia. Australia domestic economy is facing some headwinds because on the left-hand side you can see investment growth is non-existent. It's not growing a lot, and it's actually growing negatively. So that's not too good. And on the for the green line, the other part of the story is consumption. So you can see in here that when household saving ratio is so high, is also simply indirectly or directly implying to us that people are not really spending their money as aggressive as before. So this is this is a bad sign for me in terms of the spending behavior in Australia, because Australia is one of the most westernized nation in Asia Pacific region, and they tend to spend a lot. So this is telling us that domestic demand is not really bright in 2014, and we expect that to continue in 2015. So the domestic demand side of things is not really helping in Australia. And the export side of things, the external demand side of things is not doing too well too. As some of us would know, Australia is a really resource-rich country that has a lot of resources to export, including iron ore and coal. And you may guess that the biggest demand for Australian products like that would be China. And in the later part of this presentation, we are going to talk about how China is slowing down. But it's shown here that the slowdown in demand from China is actually impacting Australia's export demand directly. And China actually demands 27% of the total exported goods from Australia. So it is very significant. But on the payment side of things, we saw that Australian companies were becoming more prudent, and they are also seeing enhancement in terms of payment experience. So on the left-hand side, from the payment survey, we saw that there was a lower percentage of firms seeing long overdue. So that is a good sign. And from the macro data side of things, it also shared to us that that like insolvency in Australia is really coming down. So all in all, we think that there's a disconnection between macroeconomic environment and microeconomic in Australia. So we just can't generalize and say that Australia is doing too good or too well. It really depends on whether we are talking about the macroeconomic environment or we're talking about industry or insolvency performances, etc. For Hong Kong, I'm usually based in Hong Kong, and Hong Kong actually sees some issues for the time being. Last year, we have heard read from the news that Hong Kong actually experienced some turbulence of the Occupy Central movement. Well, it definitely hurt some of the tourism, but numbers were not showing back in the days because the traveling plans to Hong Kong were already planned ahead of the event, and nothing was really cancelled. Not too much of them actually were cancelled. But this year, we are seeing the less dynamic trend. Why is that the case? It's not only about the Occupy Central event anymore because it was cleared. However, it's about some scattered protesters that are emerging from Hong Kong between Hong Kong, some selected parts of Hong Kong citizens and Chinese tourists. So it is, and Chinese tourists actually represent a big chunk of the visitors visiting Hong Kong. 80% of the visitors visiting Hong Kong are from China. So these conflicts are not going to help the tourism, and we believe that it would lead to negative effects on hotel occupancy going forward. It will also lead to higher unemployment rate for certain industries. Okay. The next part of this regarding Hong Kong is that Hong Kong is also facing soaring on property prices. We can see from this chart that the left-hand side chart shows you property prices actually grew by around three times from the trough in 2003, while at the same time affordability is really getting higher. The higher the affordability ratio is, the less unaffordable it is to the local sector. So these two trends are actually telling us that it's not really appealing for at least the local citizens, and that's why some socio-economic tension and issues are arising. Okay, so if you're a local citizen in Hong Kong, you want to purchase a place, but you don't have the money, then you would think about renting a place. Well, too bad for you if you're in Hong Kong because the rent is also getting up. So it's now at a record level, and renting a place is not quite easy in Hong Kong because your income is not growing at all, while at the same time the rental prices are actually rising quite rapidly too. So it's really bad news in Hong Kong, and it's giving a lot of pressure to a lot of families in Hong Kong. So a lot of unrests are occurring in the small region. And we are seeing that in terms of our payment experience. We can see that there's rising reports of long overdue in Hong Kong, and there's also an insolvency trend picking up by 3.1% on year-on-year basis as of the end of 2014. Since we are painting a rather negative outlook of Hong Kong right now, we believe that the insolvency trend will continue to pick up in 2015. For India, India grabbed our attention back in 2013 when inflation was extremely high. The India rupee was actually fluctuating or depreciating rather very rapidly. Well, all these bad news are behind us already, and since Rajan, the central bank governor, went on board back in late 2013, well, everything seemed to start stabilizing because Rajan employed proactive, restrictive monetary policy, and inflation started coming down. At the same time, rupee started to stabilize. So those are the good signs. And since Moody came on board a year ago, well, the international community, the investment community, the business community in India or outside of India are becoming so much more optimistic about the country. So this sentiment is going to translate into positivism in the country, or optimistic outlook in the country, and we agree with that. However, for India to see a major breakthrough, we expect India to see major breakthroughs this year in terms of economic growth and other development. But there are certain issues that we have to be reminded about India. Is the budget deficit and account deficit that is lingering. The so-called twin deficits are really lingering in the country. Because India is quite in terms of infrastructure development. So if you are a manufacturer, you want to establish a firm there, you want to make sure that India actually has power for you to operate. Because if you set up a manufacturing plant there, if there's no power, it means that you're not running your operation properly. And so you also want to make sure that India actually has enough toll roads or railroads or freeways for you to send goods to ports and airports. So if they don't have it, it simply means that you can't send the goods to the other regions in the country. So if you are planning about exporting from India, you definitely need to have you definitely need India to have enough decent airports and ports to send your goods to the other countries. And if they don't have it, it simply means that it would be it would represent a challenge for you to export your stuff. So this is something that we are seeing in India right now. Infrastructure plans are quite lagging, and that's why export is not really dynamic. That contributes to the current account deficit. And at the same time, India needs to develop further the infrastructure plans, and that's why they have to expose themselves in terms of budget constraints. So we believe that these twin deficits will continue to last at least throughout the course of 2015. But profitability in India is increasing, and that's a good sign. When we try to look at insolvency data from India, well, there's no luck for us to actually get that because India is such a big country and getting data around is not easy. So we use this profitability as a benchmark or point of reference in terms of payment experience. We believe that in 2015 there could be an improvement in terms of payment experience because of the improving profitability. And our survey actually shares that Indian corporates are being less disturbed by ultra-long overdues. So, like I said, at a quite big on the slide where there was a table with a lot of percentages, ultra-long overdues has a probability of around 80% that is not going to be repaid at all. So, Indian corporates now being less disturbed by it is good news. We didn't conduct a payment survey in South Korea, but we figured that it is necessary for us to mention this country. When we think about South Korea, we always think about the high-tech electronic products industries, right? Well, there are something more than that to South Korea that we can look at. Tourism in South Korea is actually booming, and it is increasing at a quite rapid rate. Why is that the case? That's because a lot of Chinese visitors are now visiting there. We can see from the blue part of the bar that visitors from China to Korea is increasing by around 40% per year. So that is really massive. So the rise of China is not only contributing to the growth of China, it's also contributing to the growth of the other countries in the region. So, and also countries not in the region but have good attraction points. So North America, particularly the U.S., and Canada are benefiting from it, And Europe, a lot of cities in Europe are benefiting from it. So tourism is going to be a more important growth driver for a lot of these economies. And then we can also see that for Korea, the export is actually picking up too, led by the export demand in the U.S. That is why at the very beginning of this presentation, we painted a picture of a more rosy outlook of the U.S. economy. This is going to be important for a lot of countries in the Asia-Pacific region, including Korea. But like Hong Kong, Korea is facing some domestic issue. Something that we have to see is the property prices. So property prices in Korea is increasing so much that people are really reluctant to buy. You can see from the blue line on the left-hand side, the Zhongxi to purchase price ratio is telling us that people are really reluctant to pay. This is a ratio that tells you how much deposit one has to put in when they want to rent the place compared to the down payment of price. So this is actually at a very high level now that and that is implying to us people rather rent the property instead of purchasing it because of the high property price. So some noises are getting from the inner society in Korea, and it would take the government some effort to actually think about how to deal with that. On the right-hand side, we can see that insolvency is not quite an issue in South Korea. So it has been declining, and it declined by around 15% as of the end of 2014. So there are certain diverging trends in the Korean economy, as we see. Thailand is a place of trouble in 2014. We saw that the political uncertainty actually began back in 2013 when international work was, put into the spotlight, and a lot of protests went on, and people did not trust her and overthrew her government. So a lot of political uncertainty was seen since the last quarter of 2013 in Thailand. But we are turning a lot more positive than before in terms of economic outlook. First thing is due to the base effect, is because in 2014 it was just so bad that the comparable base is very favorable for 2015. At the same time, there are really signs of recovery in terms of visitors and in terms of manufacturing capacity utilization that you can see on the left-hand side. So we believe that Thailand is going to grow, and the growth rate is going to pick up. By how much? Well, to us, we will look at leading indicators, and the leading indicator in Thailand shows that the economy will be growing at around 6%. We don't think it is the case. We are more conservative than that, even though we think that Thailand will be growing. We believe it will grow by around 3.5% this year. The reason why we are less optimistic than what the leading economic index suggests is that there are still uncertainty regarding the political situation. So you can see that now the military government is taking control of the government right now. Well, is it going to be the case going forward, or there will be elections going on, or what? So this is something that the current government has to solve. And this is a question that they have to answer, and so this actually shares political and political uncertainty. So this is something that that contributes to our rather less optimistic view. We conducted the payment survey in Thailand for the first time in 2014. On the left-hand side, you can see that there's only 1 year data, so there's no comparison, and we are not quite sure whether this is representative yet because there's no established trend. But we actually asked more than 200 corporates there, so there's some credibility to be trusted in our survey. So here we can see that in Thailand, most of the even if there's overdue, over 96% of them were tilted to the very short end, or not very, but tilted to the short end. So I think that is that is representative to us that Thai companies, even though they may not be paying on time, they would pay you eventually. But we have to let the survey run for a few years before we can conclude that it is really the case. But the insolvency situation or the company dissolution situation is not supporting our view, because we can see that since 2011 there's a continuous pickup in closure of a company in Thailand, and it is now at a trough, at a peak level, and it is still skyrocketing. So when company closes their operation, it doesn't necessarily mean that it has gone bankrupt, it has gone insolvent, but they're really closing the operation. So it may be difficult for a company to go after the customers if they are closing the business. So this is a trend that you may have to be aware of. So here, this is about Philippines. Philippines, we believe Philippines is actually going to do better this year. On the left-hand side, you can see that there's an eased inflationary pressure in the Philippines, contributed by lower oil prices and the others. So this is a good sign. And we believe that Philippines is going to be doing better this year because there's a pickup in construction, which will be attributing to domestic demand. And overseas workers, which contribute a big portion to the Philippines economy, is still growing at around 5.9% on a year-on-year basis. So this is also adding steam to the economy. So we believe that it is our view that the Philippines economy is actually doing better, and leading indicators point to us that they are doing they are really showing optimism. So, but there are a lot of things like Philippines can still improve, and one of those will be disclosure of insolvency or business closure data. As we can see in here, 2013's data is the newest or most up-to-date that we can get, and we are already now halfway through 2015. So for Philippines to be more comparable to the likes of Thailand or the other ASEAN economies, we believe some improvement has to be made. So Vietnam is one of the countries that received quite a lot of focuses since China, since manufacturing in China has been becoming more expensive. Vietnam definitely did pick up some of the slacks of the manufacturing process from China. But like back in the days, back in 2007 and 2011, it wasn't quite easy for business to operate in Vietnam due to the fact that inflation was extremely high, and there was a huge depreciation in terms of the currency. So the exported goods are becoming the prices of exported goods were fluctuating so much. But it's not, these concerns are not quite concerning us right now. So that implies to us that the situation is really improving. On the right-hand side, we can see that Vietnam is now receiving a lot of FDI from Korea. And like I said in the previous slide regarding Korea, we think that the Korean economy is really advanced in terms of technology, and these FDI into Vietnam, we believe, is really technology as a focus. So this is by investing in Vietnam, Korean companies wants to engage the manufacturing process of high value added products in the country. So that is going to be benefiting Vietnam in the medium term. Excuse me. And for a country to engage in manufacturing process and pick up the slacks from China, that country must not see a major salary increase or wage increase, because then you are essentially just wiping out your advantage. So Vietnam is doing just that. It keeps the income level rather steady, even though it is increasing. So this is a good point for the Vietnamese economy. On the right-hand side, you can see that, well, even though Vietnam has been exporting a lot of things, it has been importing a lot of things too, and that's why the trade balance is negative most of the years. Well, it is just starting to pick up because now Vietnam is engaging in more advanced and high value added products. As Korean companies are now investing more in the country, is going to be better. There are certain things that we have to watch out for in the Asia Pacific region, and one thing you'll hear a lot this year is the AEC, the ASEAN Economic Community. So this is something that you will hear a lot in the later part of this year. I'm not going to go through this slide, but then yeah. You can go back to it and check. So for economic environment in China, I'm going to talk a little bit here in the next 10 to 15 minutes. So this is a picture. It's not about your screen. It's just a picture that I took in China. This is a city that is 15 minutes away from Beijing, and we can see that it's really, really murky. So it's one of those ghost towns that you hear from the news. So this is something that is troubling the Chinese economy in general. Environmental issues is one thing. The overdevelopment in cities that are not seeing huge demand is also the other. So going forward, there are a lot of issues for the Chinese economy that you will hear in 2015 and beyond. This is our outlook. We believe that growth will be slowing down to 7% this year, thanks to slowdown in investment and consumption. I'll talk about these figures later in this presentation. So 7% growth is the slowest that we saw that we will have seen in the last 25 years at least. So. But please do not be too worried about it, because the Chinese economy has grown quite a lot already. So back in 2006, 2007, Chinese economy was growing at around 13.4%, and now we're just growing at around 7.2% as an average of last year and this year. But we have to realize that during this period, Chinese economy has grown. The absolute size of Chinese economy has grown by one time, meaning that it has doubled already. So and now the growth of China is still generating a new Argentine economy on a yearly basis. So you can see how impactful it is still for China to grow at 7%. So please do not over worry about it. Here is a slide that I would like to address on how the consumption story is not going to play out for the time being. But for consumption to play, for the consumption story to play out, you have to have higher income growth. But the income growth is actually slowing down in China for the first time since I don't know when. In 2013, income growth actually dropped below 10%, and last year it was set to the income growth level was set to jump by around 9.3%, but we suspect it's not really happening to certain people. Especially when I travel to China, I ask the people, and they seem not to be too happy about the salary growth in last year. So we believe that eventually, when income growth is going to slow down to around 7%, the consumption story is very difficult to be achieved. That's the first point. And the second point is that the anti-corruption scheme in China is really putting pressure on the consumption, particularly the luxurious consumption in China. So that's the second point. And the third point is that Chinese travelers are now traveling to a lot of these other countries, and they're spending there. So these 3 points, I think, will attribute to the slower consumption story in the country. At the same time, investment is still going to be the key growth driver. Urbanization rate is now 54.8%, but it is by no means the end of growth of urbanization. We believe that it will achieve a 60% of urbanization rate by the end of this decade, and that means the country will continue to invest. And that means even though there may not be any massive investment plans, massive investment stimulus like the 4 trillion RMB that we have seen in late 2008, early 2009, we are going to see something quite substantive. But when I talk about how we don't have to worry too much about growth, there are certain things that we have to worry about the Chinese economy, and one of these is the rising debt issue in China. That issue is actually coming from not only banks but also the non-bank financing in China. And now these two combine for 215% of GDP. So that is an issue. It is certainly showing us that leveraging is becoming an issue in China. On one hand, corporate debt is one thing. The other is the local government debt. We don't have to worry too much about the macroeconomic implication in terms of government debt, because at the end of the day, when a province is heavily indebted, well, it still won't fall out of China's central government support. So let's say one of these provinces have less assets than liabilities. It doesn't mean that it will go bankrupt and the Chinese government will just get rid of it. We believe that Chinese government, central government will be backing up the provincial government anyway. So macroeconomic implication is not quite there. But on the other hand, it's the microeconomic issues. So let's say if you are a private enterprise and you have a project together with the local government, and the local government is too indebted to pay you back, then as a private enterprise, what can you do? So this is something that you would have to worry about as a private investor. So there are, again, divergent trends between macro and micro in this issue. So here, this is something that we are checking. We are tracking the lending activities in the Chinese economy. We can see that bank loan is still growing rapidly, and that is partly attributed by the monetary easing we're seeing lately from the PBOC, the Central Bank of China. And you can see that aggregate finance going down. Take the aggregate move by the government and the PBOC, because by doing so, the central bank government are putting everything under their control, and that's going to be good. So we welcome, but lowering interest rate from the regular banking system does not necessarily mean that the real economy can benefit directly. So in here, this is a simple illustration of how the banking supply chain or the lending supply chain works. Deposit money in the banks, and banks lend to large enterprises, because it's a structural issue in China that smaller enterprises do not have access to the regular bank systems. We relationship because of no low asset collateral, etc. So large enterprises do not necessarily need, even though large enterprises do not necessarily need all the credit facilities, they are going to get the money out because they can make easy money here. They borrow at 6% and they lend it out at 2%. Easy money, easy money. So after they get the money from the bank, they lend to shadow banking facilitators. Shadow banking facilitators lend it to the SMEs, not have access to the regular banking system. Rate up of north of 20%. So this is really hurting some of these smaller enterprises in the country because of the high interest cost. Here we can see that the reversal of trend is the payment cycle, and the payment cycle, if it works, it doesn't work, that would get people in trouble. So if one SME go bust, it would definitely hurt the profitability of shadow bank facilitators. But if a bunch of them bust, then the shadow bank bust as well. Something we saw in Thailand, and we do the likelihood of being used 15. So the other could be at risk. Interest rate, as I said, for the shadow banking system is actually quite high. That is illustrated on your left hand side, and there's a discussion between that and the right hand side, which the interest rate regular banking system different here. In the China that is signaled by signaled by the data coming from China Banking Regulatory Commission. Non-performing loan actually rose by 42.3% on a year-on-year basis as of the end of last year. We expect such trend to continue this year, and that is bad news because banks tend to have better management tools already. They employ tons of risk management professionals already. So there's such huge deterioration in terms of non-performing loan is really signaling some bad news is going to surface from China. Property sector was one of those areas that contributed to the bad news. Here we can see that real estate climate index is still bottoming and is much lower than the trough that we saw back in 2009 when global financial crisis hit everywhere in the world, and in 2012 when the Chinese government, local governments tried to stop property prices from going up by introducing a lot of property prices curbs like the purchase restriction, etc. So why are we facing this headwinds now is because of lack of financing resources, as housing sector actually employ a lot of credit facilities from different shadow bankers. Now that the government is clamping down on the shadow banking activities, they are hurting the ability to borrow from these shadow bankers. And on the other hand, there's also the development issue, overdevelopment issues that we talked about earlier. So we are going to see divergent trend in the Chinese economy in terms of property market. We do see that there's a sign of stabilization in first-tier cities like Shanghai, Beijing, Guangzhou, and Shenzhen. But then if we're talking about the other second-tier cities or like the third-tier cities that we talked about, well, the high pressure is going to last, we think. There are different tools employed by the Chinese government, like monetary tools, fiscal tools, and structural tools. No surprise, there will be we'll all be seeing these in 2015. So apparently, we don't have to be too worried about a major slowdown in the Chinese economy, but rather it will be a managed slowdown. In China, we also conducted the China Payment Survey. We saw that 80% of the firms said that they have seen overdue experience, so it's worse than the average of the Asia Pacific region. Is that? But what is that? Worse is that, like as 57% of the firms shared with us that there was an increase in amount overdue owed to them. So again, it was a sign of deterioration comparing to last year. At the same time, around 20% of the respondents shared with us that the average overdue period 90 days, which again is a sign of deterioration. That report can be downloaded from our website, www.coface.com. So I'm not going to go too deep into it, but that report will explain to you how sectoral performances were in 2014 and what we expect in 2015. But I picked up a couple of sectors to talk about here. Capital sector actually saw problems. Credit cycle became longer. Average ACT's average credit term, and AOP means average overdue period. So if these two things combine to increase to the long end, it actually means to us that the longer credit cycle for the industry, and that's exactly what happened to the chemical industry. So longer credit cycle means that it would add pressure to the company, and I guess you would understand. On the other side, we can see that there's a timing disturbance from such a long overdue. So this is something that is worrying to us, and I'm going to explain it again because I talked about it before. The longer the overdue is, the less likely it is going to be repaid. For these ultra long, there's an 80% chance that they are not going to be paid at all. So yeah, this is bad news. And why did that happen? It was because of the crude price volatility I explained to you at the very beginning of this presentation. So I'm not going to go through it again. I'm not going to go through this one too much too, because also the electronic sector is actually recovering, except for the computer manufacturers. Computer manufacturers see the adapt to equity ratio rising to around 366% as of the end of last year. It means to us that there's a high chance of runaway bad payment, because if the fundamentals of the sector is not doing good, and the fact that business owners only have $100 in a business is worth $466. When the outlook is not good, it's likely for these owners to just run away and pay their debts. This is as simple as that. So we do see that happening in China for the time being. For the metal sector, we like to refer to the steel sector, and then we can see that there's lengthened credit term. There's also rising trouble regarding overdue. So these situations are telling you how for us to look at the steel sector from a fundamental point of view. Although profitability is actually improving, it's only at around 1%. It was improving from a very, very, very low base. So don't be too excited about the improvement. We expect excess capacity to be cutting the industry in the near term, but it will be the Chinese industry participants are eager to export the trouble to the other countries, but it's not easy. Let's say it is very common for steel industry to have 5 million tons of production in one steel mill, but it's very difficult for a country like South Africa too. South Africa actually produces quite some steel too, and there's steel demand from South Africa. But the entire country produces around 7 million tons of steel in 2014, and it established a plant of 5 million tons in there. It actually means that you are boosting the production capacity by what, 60-some%. Is not easy to be absorbed. So we believe that the export it's not easy for China to export the issues out of the country. The reason why I have to talk a bit about the paperwood sector is that we see rising trouble in China regarding the paper sector. Credit cycle expand to the long end, and I guess you would understand by now. But then there's this trouble of rising trouble of after long overdue. 42% of the surveyed respondents from the industry shared with us that they saw such trouble. So this is really bad. It's the worst among all industries that we investigated. So this is something to take note of. But here, unlike the metal sector, they are getting ready to export to the other places, particularly in an environment where crude prices is low, so transportation prices is lower. So we are seeing trends of Chinese paper companies exporting to Japan and Korea and like countries nearby. So a lot of talking by now, and so in Coface actually do the different types of assessments. The first type is the business climate assessment. We look at how financial information is available and reliable in different countries. Economic research does it, part of it, but then it is the on-the-ground underwriters and on-the country managers who are contributing a lot to this assessment. So we put different countries in the grading system of A1 to A4, B, C, and D. So this is simple as that. You can be you can actually find out different grades of countries. Well, we focus on like corporate information, not like sovereign information. So, but yeah, you can actually look at it online at our website. And then the other type of assessment that we do is so-called country risk assessment. It's done by the economic research team. We look at different indicators, including the ones that I talked about in different countries, economic indicator. And we also look at industry indicators. And we also take a look at our very own payment experience. So this is something that we are quite proud of. We think that on a quarterly basis it is updated, and we think that it is really showing what was really happening on the ground. Here is something that you can expect to see, like different gradings and the evolution of gradings, right? You can see in here how we look at different countries in developed advanced economies, and how it is like in Asia. We talk about some challenges in China, and so yeah, as you can see in here, we put a message on the AP grading of the Chinese economy in terms of corporate risk. So this is it. I guess I can just I don't want to talk too much, and allow you to I can open up the floor to questions, a couple of questions maybe.
Actually, so far it looks like we have no questions yet.
Okay.
So thank you very much, Rocky. That was very informative and very interesting. Since nobody has posted any questions, and I see a couple people are starting to drop off, I just want to say thank you for everybody for listening. We'll be sending you a copy of the webinar slides within a few days. And with that, I'm going to shut down the webinar. Thank you again for taking the time to join us today. And again, special thanks to Rocky and our partners at Coface for presenting today.
Thanks. Bye.
Everybody have a great weekend.
Thanks, you too.
Okay, bye.